All right, ladies and gentlemen, what's up, Ted? Ted's got a frowny face on. Yeah, down 2.5%. Not a good day. Very news-driven market yet again. Trade war escalation. Futures dive as China retaliates. Oil prices surge on tanker attack. Wow, tanker attack. That's interesting. What's that about? Apple leads decline. Wow. Eli, you're underreacting just a little bit, okay? Just a little bit. Roku holding on to its game pretty decently, though, up here. INS. Pretty rock solid, I would say, given the current state of the market. Market's now dropped about, is that almost 6% from the highs there on the NASDAQ. So look at Friday, too. A big bullish close. That's one of those fake out moves. Market does that from time to time. Yeah, sometimes on a Friday it'll make you feel really good about yourself and then slit your throat over the weekend. I talked about this the past couple of days when I went to cash. I'm like, yeah, I don't want to wake up one day and everything be down like 2%, well, 2.5% on a Monday. Not very good. I heard enough on stocks this morning, Ted. I don't, it is what it is, my friend. Market's overrated. Time to, well, I'm really not one for the correlation between, or even the anti-correlation between crypto and stocks, but I mean, there's a pretty good case here that we've got some money moving into crypto from Wall Street. I mean, there's some pretty good money being put to work here, and it's hard to argue that. Well, I will say number one, the institutions really can't do a whole lot as of yet, but there's definitely some individuals probably taking notice and putting some money into crypto. So yeah, Friday. Yeah, that was a good day. I was pretty. I mean, look, if you look at the general trend of the market, we mentioned Friday, even during the show here this morning, the power hour was an outside day. You know, it didn't close outside of the range, which is typically the more bullish situation. Um, but yeah, gap down this morning, not so good. Good time to enter crypto again, or are we expecting correction? Um, well, it's interesting, Justin. We're basically out of the bear market. All of the all the general signs, all the general triggers are there in terms of, we do have a confirmation of arguably a higher high. If it fails at this point on a very, very large scale, um, the argument will be this was the high that was never broken. But so far, there's no signs of that. Yesterday in crypto, at least with BTC, we did have a pretty large distribution day right here, but it didn't move. So it didn't move at all. So that's actually not too bad. Actually, attempting to make new highs today, as it is. So pretty interesting stuff right there. Yeah, we'll see how that goes. Yeah, in the crypto power hour the other day, we went through and looked at all of the large USD cap, and it was a pretty good picture. Pretty good picture was being painted. So yeah, pretty decent stuff in crypto. I think it. Yeah, I definitely think you can get back into some key names. Absolutely. Uber, again, IPO base. I try to stick to the rules. I don't know what the, is it Uber? Okay. Undervalued at IPO. Well, not undervalued enough. It's down 9% today. So I don't think it's that undervalued. No, I wouldn't touch Uber. I wouldn't touch anything right now. I won't touch anything. Market's in a decline, and we're going to continue going in a slide for a while. We've broken our main trend line here on the NASDAQ for the current trend. Broke through the 50-day moving average. We got the 200 maybe coming up. I'm not touching anything with a 10-foot pole. Perfectly happy with my cash position at the moment in terms of the stock market. So yeah, I do still have a couple of lingering longer term positions. So each trade is telling me my daily gain is minus 0.17%. I'll take it. Speaking of which, I do still have that. Remember that Riot position we entered like 9 months ago? I do still have that. Right up 14% today off the lows. So I think there's some other things happening other than BTC in regards to Riot's valuation. I think the company is being, was it GBTC's the? Yeah, GBTC. In terms of valuation for big stocks that have positions in Bitcoin now that it's kind of back out of the fringe bear market. Yeah, Riot blockchain, which we're looking at right now, being one of those that's, I don't know if it's best suited to take advantage of that, seeing how Riot basically mines BTC, and I'm not sure what their break-even point is, let alone how much money that they're going to make. But you can imagine Riot is going to have some good days ahead as BTC has some good days ahead. Riot has a composite rating on IBD of 74, which I'm actually kind of shocked about. Relative strength rating of 92. Both metrics not horrible by any stretch of the imagination. EPS change was 31% last quarter. EPS change current quarter 89%. Last quarter earnings surprise was negative 135. This was BTC price 3 months ago was horrible. Pre-tax margin 777%. Holy crap. Sales growth rate almost 500%. Sales percent change last quarter 745%. Wow. That's quite astonishing. Market cap 59 million. This is a micro cap. If there's a definition of micro cap, you're looking at it right there, $50-something million. 59 million, that's why it's only a 74 composite rating. Other than that, the other metrics are pretty solid. I mean, all things being considered. Roku going positive, ladies and gentlemen. This is a rock solid stock. They don't want to sell this thing off at all. All right, speaking of Bitcoin in the stock market, GBTC, if I remember correctly. Yeah, there we go. So GBTC here, another potential. If you want 401k exposure to Bitcoin and you can buy individual stocks, I believe GBTC, I think this is an ETF if I'm not mistaken. Yes, CIBD doesn't have it. 297% to all-time highs up there. Yeah, GBTC could be a decent play if you are looking for some retirement exposure to BTC. I mean, I don't think that's too bad at all. Hey, what's up, Peter? I don't know. I got to get back on that horse, Peter, to be quite honest with you. I've been definitely lacking on that channel. It's not good. I'm sorry about that. I don't have any great reasons, great excuses. Honestly, just a little lazy with the crypto channel. Really, I can walk you through my life and stuff, but it's not gonna make any difference. But I'm gonna jump back on the horse here and make a couple of changes to kind of get things back to the way that they were. So you'll see some new content coming up pretty soon, probably today actually. It's a weekday. I'm starting to make some changes as of today. So you'll see some stuff out of me. Bitcoin Cash up 3%. Trend lines too. All right, GBTC. No options on GBTC. That's a shame. See, Riot Blockchain has options. It's one of the reasons why I'm looking at Riot. But up 14%. What's GBTC? Only up about 10%. So not too bad. Selling off this morning. That's probably due to the stock market, obviously, more than it is due to due to Bitcoin's price. But yeah, I think we'll see some good things out of these names in the future. Starting to get some volume coming back into them too. GBTC being one of the ones that's had exposure for a while now, actually. And you can see the tremendous gain, 23 cents to $38 is insane. And we'll see more of that. It's really funny. You see a very retail approach here with the volume at the spikes instead of volume at the bottom. So not a lot of institutions jumping in, but I think there are some institutions probably jumping in during this run. And again, if you want some exposure to BTC, GBTC is something that you can purchase. This is basically like they call it an ETN. I'm not technically, I'm not exactly sure ETN versus ETF, but GBTC will get you some fairly direct exposure. Riot Blockchain gets you exposure to a company that basically mines Bitcoin, so it's a little bit different. GBTC, I believe, actually does hold Bitcoin, if I'm not mistaken. So good stuff happening with Bitcoin. So yeah, I would argue if you guys wanted to hold some in your 401ks, Roth IRAs, well not 401ks, but Roth IRAs and other retirement accounts, even some long-term exposure to Bitcoin in any stock account, I would do GBTC, Riot. There may be some other options out there right now. Bitcoin exposure in the stock market. Probably won't bring up much. Yeah, GBTC, HVBTF, whatever the hell that is. Oh, Hive blockchain, HVBTF. So that one pretty cheap. Really cheap. Super cheap. It's over the counter, so OTC other right there, over the counter. You may not be able to get it on some things. Overstock. They're mentioning Overstock, which they're not a pure Bitcoin play, but if you're looking at a pure Bitcoin play, there you go. Market's still down about 2.5%. Really no change there. Like we were talking about last week, it's basically at this stage of the game all China, all about China. So if this continues, which it looks like it is, gapping down 2.5% today, which in reality doesn't get us really very far if you look at it. Still in general price trend on the NASDAQ. That's our general channel that we're stuck in right now, in terms of the Nasdaq. So until that breaks one direction or another, we're going to continue in this general downtrend right now. Kind of a not really very fast exit for the market for a lot of institutions, but a pretty measured exit for a lot of institutions. So that's not bad. Oh yeah, Nvidia. And think about that one. Nvidia lower. They were mentioning Nvidia is it's a Motley Fool article talking about Bitcoin and Nvidia in terms of mining when you can't mine Bitcoin with an Nvidia card. Unless the miners that Bitmain makes are made with Nvidia cards, but I don't. That could be the case. Maybe that could be the case. I don't know. Beyond's holding up. Let's take a look. Oh yeah, it's up there in the green, 0.27%. Yep, definitely come down. There's a potential. We already have our buy point from our IPO base here, this 85.45 high. So I don't know if I want to jump in right here, but your IPO breakout is one of your safer bets. This is not an IPO base. This could be right here. This correction from 85 down to 66, already down 25%. Yeah, that could definitely be a correction for Beyond. Let me double check what the IPO base. I think it's at least a couple of weeks, but sometimes they happen in a week or two. Yeah, okay. It's coming back. Yeah, IPO bases can happen within a week or two. Okay, now let me look up this article. IPO base. No, it's not on the. Here, I'll show you guys. IBD while I'm looking it up. I don't think this talks about IPOs, but it doesn't talk about IPO base. New Bullish base formation. That was a couple of months ago. But really looking at key terms, maybe IPO base. IPO date. This is their old website. I'll go back to their new website. There you go. There's the new website. I'll have to get out the good book probably, which my friend never get back to me. Nasdaq now down 2.76%. It's like Friday would have been a good day to short the market, although I don't really do that. So, well, Riot. Wow, my options are still flat on Riot. I have MJ positive. Is MJ positive? No, it's down 4%. Options must just not be trading that much. Yeah, right, Eli. Sounds like a fantastic idea. Yeah, well, it would have worked out today. So I don't know. I think if anyone is looking to short the market, which there's probably a lot of people do want to make some money on the way down. Uh, Again, we don't necessarily know how this is going to happen, but we are going to get a couple of huge rallies as tends to happen. This is our our previous bear market, pretty much every day that got you bullish and excited was a data short. Right there, right there, gap up, close down. That would have been a great data short right there. That would have taken you actually down to the lows, if I'm not mistaken. I'm treating this like trading view, but it's not. That would have taken you down, 14+% in the Nasdaq from that little leg alone. So yeah, I would argue any day that gets you pretty bullish from here on out, without some kind of meaningful change with China or a plan to stop an economic decline as it is probably in the cards right now, with escalating tariff wars. So anything that looks bullish is probably an opportunity to exit. Um, we could accelerate this lower from here throughout the week, and this can end up being a really bad week. I don't necessarily want to bet on that, but if you guys do, you have to pick a point where you're willing to exit. If you look at the Qs, which don't have the same trading cycle that the futures do, you're going to see a massive gap. So see this huge gap right here. That's big for an index. We are undercutting lower, but I would almost argue this is kind of a smallish volume. That's true. Yeah, that's kind of what I'm saying, Eli, is that if you short here, you really run that risk of being run back up, and then you end up liquidating. Um, I would be trading inverse to the market right now. If you're looking to short, I would be shorting it at higher levels instead of instead of lows like this. But if you go to the Qs, excuse me, if you go to the Qs here, um, not tried along this candle, elevated volume. Was it about a little under a minute left in this 5 minute candle, making a new low? So yeah, I'd give it some space. I definitely give it some space. Hold on a minute, guys. I'll be right back. All right, guys, I'm back. Man with obligations. I've got my fair share of obligations. Uh, Market overall built new high. It could be just news plus taking profits. Building smaller cup then restart. Tesla seems to be going full bear. Yeah, let's look at Tesla. My wife never to look at her account again. Oh, 228. Shite. Yep. I mean, it's just sign after sign of dying stock right here, to be honest with you. I have to tell the wife. I don't want to lose too much money. She's not really a trader, but tell her to invest in Bitcoin. AEYE up 2.2% on my screen right there. That's interesting. About a 240, Peter? Yeah, I wouldn't. I kind of walked you guys through my feeling on Tesla and that kind of 240, 250 level. Failure to get above 260. We covered this, I think, on Friday. Failure to get above 260 is very negative right now. This is your line in the sand for Tesla. You have a pretty clear pivot point there, in my opinion. And yeah, there's enough people jaded with Tesla right now, and it's failure to. I mean, honestly, it's failed to really deliver economically on its promise. Love the product, but from a stock perspective, it just hasn't. It's had its shot, to be quite honest with you. And until it changes course drastically, or just shows, hey, all of a sudden we're actually profitable, because we took these other measures. Does something responsible. It's dead in the water. How low could it go? Any stock can go anywhere. So I'm not going to put a price target on it, but does the next floor? So we have a breakout point here at about the $200 mark, and then sub that you've got this 177, and then this 135 on the weekly. So at this stage of the game for Tesla, it's just wait and see where it bottoms out. But yeah, I'm not touching that with a 10-foot pole. Yeah. Yeah, directly to answer your question, Peter, the way it's behaving at the moment, yes, I would expect it to keep falling. In terms of what direction and how it gets there, wherever that next low is, I don't know. We have this declining wedge with these two trend lines, and we're still kind of respecting them, I think, so far. So there's our pattern with so we have our pivot point here's the 260 level, just under 260. We've got this trend line, and we've got this lower trend line. It's still within the trend lines. So if this thing, I mean, if you look at this on the weekly, it's a very, 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 very steady and long and aggressive downtrend from that 380 level. Wait, are you planning to get out of your long investment with what, Eli? With my TQQQ position, or with my wife's Tesla position? Well, look, she pretty much has all of her account here. I don't really want to see her IRA, taken down by 33%. I mean, with this undercutting complete support, I may actually talk to her about that, because she'll check it one day on her own and be like, "What the fuck? I'm down 20%." Blah 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 blah. And then I'm like, "Oh yeah, by the way, Tesla took a huge dump." And then I'll get divorced, and then there'll be a used wife for sale. Nasdaq down almost 3%. Let's go back to the NQ. Not looking good here today by any stretch. We're breaking this lower trend line. That could be some acceleration in the downtrend. That's not good. That's not super bueno. Yeah, basically, Eli. Yeah, essentially. You got to look on the bright side of things, man. You got to look on the bright side of things. She inherits half of my Roth IRA, and I inherit half of her horrible Tesla position. Works good. We get that through the divorce settlement. Yeah. Nasdaq taking it on the chin here, guys. 3% today. More than 3%, 3.2%. That bullishness from Friday has turned into some, I would argue, fairly decent panic at this point. Where's the, let's get the IBD paper here and see what, where is it at? There it is. See where their fear greed index is. So something is put out on Fridays. Obviously, it's not going to be, they have uptrend under pressure. Oh, we're going into correction today. There's not even a joke about that. Not even a joke about it. Yeah, where are we at here? So let's go to market trend. And I believe they also have some, no. They changed this damn paper on me now. I don't know what's going on. Oh, here we go. Bulls versus Bears. So we are at, where is it? 50 something? Investment advisors bullish, investment advisors bearish. What the hell's the number? Give me the effing number. Oh, 55.5 current. There we go. High is 56. So definitely have some way to go down in terms of sentiment. This is a sentiment indicator that IBD puts on here. Psychological market indicators. $10,000 shares or more, increasing 6th, 7th, 8th, 9th. Looks like they didn't get the volume in for Friday yet. Advanced decline. Say the advanced has the highs there. 4.52 for short interest ratio, which is pretty neutral actually. So you could argue that the market's was a little bit too bullish, but it's not crazy bullish. Of course, this is a thing to do with China, not a thing to do with bulls versus bears, I think. Yeah, so other than that, guys, I think we're just getting on with this correction. We're going to go right back into a correction today. If we reverse out of this today, I will be shocked, because there's no way we go up 3.3% on a day like today. I mean, trade war is not going to flip on its head by any stretch of the imagination. Man, I wonder if I should, I don't know. We did miss some pretty good short gains in the last one. See, now the trader's coming back at me. I'm like, if we're going to go down a bunch more, I mean, could we go back double test the lows here? Yes, I would argue we can. I don't think that's out of the realm of possibility. The trader in me is like, oh yeah, maybe we should go ahead and short that a little bit. So maybe I will. I don't know. I'll think about it. I'll think about what I want to do here. I won't short it right now, but it's looking like we're going to continue out of this. Yeah, we'll see what happens there. Getting pretty close to that 200-day moving average on the NASDAQ. So wait for another bullish day and maybe think about shorting this thing if it goes up. If I were to do that though, I'm trying to think of a way to, I don't know, if you're going to short this thing, try to capture some gains. Probably better to do that. I don't know if I do it with, maybe we could blanket short the index. Could do that. I don't know if I'd want to go leverage in terms of options or anything like that, but you could. And there's a potential to use options maybe if you're going to October 2012 on the S&P. Well, let me look at the current S&P. I guess, and then I'll check it out. Oh, weekly? That would probably be a little bit easier, huh? There we go, weekly. Bam, 2012. Yeah, right, Justin? It's a Yeah, those TQs are double-edged swords, man. They're double-edged swords. You got to get in and you got to get out when the market shows you a retracement, basically. So what am I looking at here? We're looking at, you think in 2016, 2012. You said October 2012, which is right here. And what are we looking at here exactly? You're looking at the high or low? I'm not sure what you want me to look at here. Spell it out, buddy. Video top's a little cut off. Yeah, yeah, it is. The way my broadcasting software works, I can't get my full screen. My full screen would be like this. You can see I got a bunch of black over here, so I basically usually cut off a little bit of the top and a little bit of the bottom. I try to fill the width so I can go down like that probably. That probably looks pretty good. It's a little different for the crypto power hour. So I usually keep it what looks good for that, but maybe I moved it beyond. Bounce of previous resistance and then rally. Are you referring to this sequence? Like now we're here and you're thinking maybe we just bounce after that? Yeah, the whole thing was though there was nothing like China. You know, you have to think in my opinion, in my opinion, you have to take the stock market from a macro first perspective because it can't be all technicals, especially with indexes. To be honest with you, indexes and technicals don't work fantastically. They don't work that great. They work much better on individual stocks. So in 2012, we didn't have I don't think. I mean, I don't remember everything that happened in 2012, but I don't remember a major major issue. You know, you're just kind of the same old, same old. We're still in the middle of QE pump right there. Now QE pump's basically gone. We have China and the U.S. in these massive trade wars. So I think it's a little bit different. Now, I would argue on the ES, we barely eclipsed the high. I think in 2012, it was a much larger increase. Yeah, you can see right there. We eclipsed the prior high by a significant amount before rolling over and barely. You could almost draw a channel here, and it won't be exact. I can tell you that right now. It's going to be like an ascending something or other. But again, like I said, I don't really think you can take this on these patterns to be quite honest with you. You probably give that wick up a little bit right there and end up with a bit of a different type of rising triangle of sorts. But yeah, I really just kind of view this in its own. I view this in its own right, to be honest with you. I wouldn't put it in line with 2012 like that, or I wouldn't try to find a correlation with a prior, other than if you want to look at those times where we were looking at tariffs, see if there's any. I mean, this is a pretty big volume candle right here, pretty big. We had a volume candle almost at this high, basically start our bear market from last year. I'd be interested in back-to-back bear markets. Let's do that, back-to-back bear markets. The forgotten bear markets. Let's check this post out just for fun. Market's back a little bit, 2.42%, at least on the ES. What's this guy saying? Okay, back-to-back bear markets. Here's a list of short synopsis of some of the forgotten bear markets of the past 80 years. Let's look at tariff ones. No one mentions tariffs. Monetary policy, Fed tightened monetary policy 20%, 20%. I don't see, nothing tariff related here. %, no recession to cause this downturn, but there was a Pearl Harbor attack and the U.S. entering World War II. Following the Great Depression as aftermath, most people had more or less given up on the stock market. Fairly true. World War II bear market was caused by investors wrongly assuming the end of the war spending could cause economic slowdown. Instead, there was a period of massive inflation coming along with pent-up demand as those who returned from the war looked to plant their roots. There'd be no recession this time around. Oh, so this was a bear market without a recession. Interesting. I mean, best case scenario, we run into that same situation here where we just had a bear market without a recession. That would be interesting. So 57, July to October, the Fed tightened monetary policy in the 2 years leading up to 57, causing a recession, saw GDP drop even further than it did during the memorable 73-75 contraction, which makes no sense because what was memorable in 1957 was not 1975. Stocks had also risen enormously throughout the 50s, so the fact the market fell shouldn't have been a shock following such a strong gains. Again, another potential bullish scenario. Again, I think I said this last week. The only thing that we have to have is a lightening of these tariffs, and the market will kind of rebound. But so far, they haven't been lifted. So we'll see if those tariffs end up tanking the market and Trump's precious record. Of course, he'll blame something else for the stock market crash. Take full credit for its inflation, but he won't take responsibility for its decline. That's why you don't take, if you're a politician, in my opinion, you don't take credit for anything in the stock market, at least publicly. If I were running for office, I'd be like, yeah, stock market's running. We're doing a good economy. Apparently, the market likes that. But I don't know if I have anything directly to do with that. I'd be something along those lines, because the second it comes back down. Last week, good job, Justin. Good job. Right about when I did. Yeah. Yeah, we kind of noted the failure of breakouts, things of that nature, kind of leading you to a little bit. Plus, with the whole tariff thing, and just the way the market was behaving, lots of distribution days, big volume coming in. It was a pretty good time to go cash there. Okay, original flash crash occurred in May 1962. Stocks fell 6% in a single day for basically no reason. But stocks had already been falling into this period through the recession. Though the recession ended February 1961, the best thesis people could come up with came down because they went too high. That's a good reason if I could think most of the time too. Whoops. Oh, is this more on that individual decline? Oh, that's cool. Are these links? Other mythical beasts. Yeah, right. Negative 22%. There was no recession in concert with this tumble in price, but interest rates had risen precipitously since the start of the decade. The 10-year Treasury rose almost 2%. That's interesting. 68, one of the most tumultuous years of the post-World War II era. Vietnam War, assassination of MLK and Kennedy, anti-war protests, racial tension, general sense of anger around the country. Also a minor recession, along with the end of the go-go years. By all accounts, this is one of the most underappreciated bear markets, down 36%. That's interesting. Minus all the bloodshed, you could almost argue we've got some, I'd give it like a 40% correlation with this era. Like I said, minus the bloodshed, we don't have too many major people being murdered, but we do have a general sense of unrest around the general country. you know, some racial tensions, I would argue, were fairly divided, but I don't think that has much to do with the market right now. This one was due to inflation. Two separate recessions from 80 to 82. Minor bear coincided with an 8-month recession in the start of the Gulf War. And really nothing with tariffs there. I'll look at that a little bit more later. All right, Q's finding a little bit of footing here. Volume not very aggressive, probably just to float up or hang out the rest of the day. We'll have to wait and see. I don't know, we can check Trump's Twitter again and see what, maybe he tweeted something anti-tariff. Probably not. No, it doesn't look like it. The unexpectedly good first quarter 3.2% GDP was greatly helped by tariffs from China. Some people just don't get it. I would actually be interested to see how we can get it. I'm looking at Donald Trump's tweets right now. Helped by tariffs from China. Some people just don't get it. Well, help us understand. I'd love to understand. Man, that dude's busy. Busy on the tweet. Either that. So I wonder if Trump's just really busy on Twitter or if he spends this much time in the bathroom. It's about 2 hours in the bathroom. Could sound about right. Steady diet of McDonald's and Burger King. Could spend about 2 hours a day in the bathroom per time. So he's been tweeting for about 2 hours. 12 hours, 13 hours, 14 hours. No, it looks like I could spend all day in the bathroom. Anyway, I'd be interested to see how the tariffs related to GDP. What were the tariff intakes? What was that, Q3 he said? Let's look into that. Interested to see if maybe the man actually is saying something useful. First quarter GDP tariff. Let's Google that. Why not? We're allowed to do that. China tariff in first quarter. Are tariffs, here we go. Are Trump's tariffs bolstering the U.S. economy? Oh, it says nope. I was looking for a, oh, go away. You tell me I can't read your damn article? Piece of garbage. Loads the full article and then kills it for me. If you got a hack for that, Eli, I'll be happy to listen to you on that one. Winners and losers in Trump's trade war 7 days ago. Fact box by Reuters. All right, let's see if maybe trade war does bring it in, but it's not going to help. Yeah, even if it goes directly to the federal government, the money, it won't help the stock market. So I guess for us, it doesn't make a big difference. You try to hack it, they are smart. If you could take a snapshot of that website before that thing pops up, No, that one's not an overlay, Peter. I've tried that before. If you looked at it, I was looking at the scroll bar. The scroll bar goes from this to almost the full page. There's nothing beneath it. They changed the whole thing. You'd have to take a snapshot right before that overlay comes into play. Maybe if you just stack trace and then paused it or something. I don't know if you can do that. Anyway, not a big issue. Oh, they don't render all the text? Gotcha. Okay, so let's see. So Ford says it incurred headwinds of $750 million in tariff-related effects. Lower sales volume, increased commodity prices. Okay, so no, I'm looking for what tariffs are bringing in. I wonder where tariff money goes. I believe you, Eli. Where does tariff money go? Here you go. My favorite site, Quora. I like Quora. So they just go to the IRS then. Yeah, straight to the Treasury. Interesting. Okay. Makes sense. Cool. Maybe China will pay off our debt then. let's let's raise tariffs enough so we have China pay off our debt. That would be fantastic. Oh, here we go. 115% of Trump's China tariff revenue goes to paying off angry farmers. Oh. See, I'm actually looking for bullish tariff articles that show numbers, is what I'm looking for. Tariff relief. As the U.S. generally does, we spend more money than we take in, even in regards to tariffs. Okay. See, I don't know if the chair's trade war with China makes Russia great again. I told you it's a great slogan. We talked about that like a month ago, how great that slogan is. What's this? All right, enough trying to play devil's advocate there. With that, guys, I think I'm going to bounce and get out of here. We got a languishing stock market, little bear flag forming here on the 5-minute. Not that you got to trade off the 5-minute, but the main thing is we're essentially not bouncing out of this right now. I can't imagine why we would. If you take stocks from, like I mentioned earlier, a macro perspective, I never did really elaborate on that. Basically, the stock market takes a top-down approach, not a bottom-up approach. So tariffs are a pretty top-level economic thing. So I would really argue that until this China trade, unless the tariff thing is settled, or they both just drop tariffs and get on with their merry lives, we're not going to be at a good place in the market. Now, it's hard to say again how far down we'll go, but we are pretty high still. We're within, what was it, 5% of the highs or 6% of the highs? Within about 5% of the highs, and let's say we do drop all the way back down, 18% to the lows. So you're basically at a 3-to-1 risk-reward ratio for a potential trade if we get back down to the lows. But generally right now, I'm not super bullish on anything. Very happy with cash, and that's that. So, all right, guys, I'm going to get out of here. Have a great day. See you guys tomorrow for some more market calamity. Bye-bye.